Good day, crypto trader. On November 9, the price of Bitcoin plunged enormously. The consumer price index is revised on November 10 in the United States. The CPI release dates have historically been extremely volatile trading days. For traders looking for profitable opportunities for the big day, key levels have been defined. Bitcoin cost has encountered a staggering landslide as the shared computerized money penetrated new yearly lows at $15,600. The cryptocurrency market will probably experience an increase in volatility now that the United States will announce updates on inflation during the announcement of the Consumer Price Index. The current auction price of Bitcoin is $16,143. In comparison to the $704 million worth of short liquidations that took place during October's last-minute bull run, the total of long liquidations recorded by CoinGlass in the last 24 hours is $679 million. BTC may have one more low to print in light of this subtle information. The 2020 order block at $14,900 would be a significant level of interest. BTC auctions are currently at levels last seen in 2020, prior to its infamous bull run. Retail bears have joined the trend as the relative strength index continues to fall into oversold levels. Before marking the price down, market makers may conduct a liquidity hunt in the north. The most recent high of $18,000 would be important levels of interest. The current sell-off has fewer transactions than the liquidation of the U.S. midterm elections, according to the volume profile index. The bears might be ready to let go of their shorts, according to the indicator. However, the next targets would be liquidity zones established in 2020 between $15,000 and $14,500 if the technicals are misinterpreted. To summarize, traders should aim for $16,500 while maintaining the $14,900 and $14,500 levels as potential buying opportunities. In the short term, a rally can occur as high as the Wednesday high of $18,000 if $16,500 is breached. The Cardano price has fallen significantly over the past 3 days, as has the market as a whole. The third-generation cryptocurrency, on the other hand, is rising following the release of positive inflation data from the United States. It is anticipated that the cryptocurrency will reclaim its critical resistance and transform it into support. As a result, the price of ADA will return to where it was prior to the decline in October. On November 10, the price of Cardano turned green, rising by 11.04% to $0.352 following a decrease in U.S. inflation to 7.7% from 8.2% in October. This proposes facilitating liquidity conditions supportive to financial backers and a more vulnerable U.S. dollar, raising the cost of most digital currencies since it is in dollars that they are estimated. Like every other cryptocurrency, the altcoin was caught in the crossfire of the Binance and FTX scandal, which caused the crypto market to crash. The ADA broke through its crucial support of $0.330 after losing 21.53%. To reach $0.415, Cardano will need support from its supporters. Since the beginning of October, ADA has struggled to close above this level, which is the next critical resistance level. ADA should be able to find the fuel to start a new recovery if it can turn this resistance into support. Traders and investors would need to inject some additional buying pressure into the market in order to achieve this 18.46% rise. Cardano is poised for an upswing because the Relative Strength Index, RSI, bounced off the top of the oversold zone and then rose. Additionally, if $0.415 were to be reclaimed, the 50-day, red, simple moving average, SMA, which is currently at $0.401, would become support. Cardano's price could retrace to $0.330, however, if bearish sentiment returns. ADA may consider $0.261 as its next support in the event of a further decline. Investors who intend to minimize their losses may begin to sell as a result of this. As bulls buy the dip, Ethereum, ETH, price action is recovering this morning. Ethereum buyers are adding to their portfolios at the lowest price area in 2022 as the marker at $1,100 was hit overnight. When factoring in the fact that the Relative Strength Index, RSI, has been crossing the oversold threshold on Wednesday, bulls ought to keep a close eye on $1,234, as it has the potential to halt price action and trigger a dead cat bounce. The ETH price action joined the other major cryptocurrency pairs in the massacre that followed on the back of Binance's intention to take over the much-maligned crypto exchange FTX. Although the price action has recovered, it has not yet been fully declared healthy. The legality of the non-binding letter of intent, which gave Binance the right to end the deal without going to jail at any time, was the root of Tuesday's debacle. It did so almost exactly a full day later, stating that the juice was not worth the squeeze. The price of ETH fell another 17% as a result. The lower range of 2022 is where price action is currently residing, which is why ETH price action has been recovering this morning. Bulls are eager to participate in the market and purchase at a discount, which may cause price action to return to $1,243. The red descending trend line from September and the low of February 1, 2021 intersect at that level. The risk here is that bulls attempt to break through the $1,243 level's double resistance but fail. A dead cat bounce would occur if bears used the level as an entry point and pushed price action back to the downside. In the end, the low of Wednesday would be tested near $1,073, and ETH may experience a smaller leg lower toward $1,014, which has been a crucial level since June 15. As news of FTX's collapse has rippled through the crypto ecosystem, the total value locked, TVL, on the Solana chain has dropped 32.4% in the last 24 hours. At the time of writing, Solana's TVL is $423.68 million, down 32.4% from its all-time high, ATH, of $10.17 billion on November 9, 2021. DeFi Llama says that TVL measures the total value of all assets that are locked into DeFi protocols. A rising TVL indicates that investors are withdrawing funds from the ecosystem for a variety of reasons, while a falling TVL indicates that more coins are being deposited within the DeFi protocols. However, the decline in TVL reached a 24-hour low of 51.7% before a slight correction occurred prior to the writing of this article. Marinade Finance, a liquid staking protocol based in Solana, has lost the most TVL on the chain, falling 35.1% to $115.79 million in the past 24 hours. Over the past 24 hours, the automated market maker Radium, the liquid staking protocol Lido, and the lending protocol Solend have all experienced similar declines on Solana. TVL has decreased by 10.59% for Ethereum, 9.68% for Binance Smart Chain, BSC, and 8.84% for Tron over the same time period. Although Alameda Research and cryptocurrencies that were exposed to SBF's companies have been the most adversely affected, Sam Bankman-Fried, SBF, the founder of FTX and the crypto hedge fund Alameda Research, was an early investor in Solana. The price of Solana's token SOL, which is worth $14, has also fallen significantly in comparison to its rivals, falling by 40.53% to $13.38 in the past 24 hours. After news that Binance might acquire FTX, the token briefly rose, but it fell when Binance pulled out of the deal citing allegations of mishandling of consumer funds and an investigation by regulators. Anatoly Yakovenko, co-founder of Solana Labs, has reiterated his bullish outlook on the network despite the network's recent losses. In a tweet on November 9, he cited the recent network-level improvements and the quality of builders as major positives. During Solana's annual conference, a number of announcements were made, including the launch of the Solana App Store, a partnership with Google Cloud, and a forthcoming smartphone.